Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, everyone. Ira Epstein of Linn Associates with your financial market update for the end of business on this Monday, the 27th of February, 2017. All right, my friends, another record day in stock indices. Frankly, the weak one was the Russell, and it managed to rescue itself to my surprise. But that's how surprises go, and they're called surprises for that reason. Now, a lot of this has to do with President Bush's speech tomorrow night. We have a lot of economic data in the morning tomorrow, and those of you that get my twice daily updates you're going to see, and I give you the estimates for what they are. The President speaks at 9 p.m. Eastern Time, 8 p.m. Central Standard Time, and he's going to release ideas on his budget. He's going to talk about Obamacare, how they want to change that. They're going to talk about defense spending, where the money's going to come to find the 50-some-odd billion. He's going to talk about non-defense cuts to have that money, tax cuts, and God knows what else, because you never know when he's going off script. So be ready, the world will be, and you had a pretty rocking day because of it today. Do not get enamored with these closes in the metals. Very frankly, gold was near the low of the day on the close. The silver market was making new lows, so it was almost 15, 18 cents lower than this. You'll see on the reopening tonight that the metals should be, if they just open where they were at the end of the day, lower. But when you come to the stock indices, it's nonstop. The market up to another record high close. I think that's, 11 days in a row or something in the cash market that it's done it. It's rather dramatic as this has gone on. From a closing basis, you can see you're now up to a new high close of 20,813. You get to see on the futures that the market has come up, sort of just going sideways, if you will, right here, but still making the pattern of higher lows and higher highs, which is bullish. If you were to take out 20,695, that pattern would be broken. Now, breaking it doesn't mean you get bearish, and the reason is you're still over the 18-day moving average of closes with the 100 well under it. You have not made your recent run up to the higher Bollinger Band. You've stalled against it, but the market is saying as long as you keep this embedded slow stochastic, that even if the swing lines are broken, the traders are going to be buying on the breaks because the momentum is locked in the bullishness. Take that red line, close it under 80, I'll have a whole different story for you, but that's not there. It's the same game plan in the slow stochastics. You've drifted sideways away from the upper Bollinger Bands. These markets, if they want to run, can certainly do so, and there's nothing on the charts that are bearish whatsoever. Same goes for the NASDAQ. It's kept its bullish embedded momentum. And here's a rescue. Surprised me, to be honest. If you take a look on Friday, the slow stochastics lost their embedded reading. They did gain them back today because you needed a strong close and the market managed to eke it out. Now, the first signs of weakness are certainly into this market. This, to me, is now my least favorite of the stock indices because that occurred. So in the hierarchy of looking at them, I certainly like the S&P, the Dow, and the NASDAQ a lot more than I do the Russell. Doesn't mean they're all not bullish. They are. In the VIX, you are caught in this noise of the Bollinger Bands and not trending. You're just drifting around. I guess if I were to say you are a trend, you got higher lows, higher highs, so that would be it until you take out 1144. And because you're just staying in there, it's a hard one to trade. In the T-bond market, you continued up to the upper Bollinger Band on Friday, and today you saw a bit of a respite. The market is in overbought territory with the slow stochastic reading over 70. So yes, the trend is up, but with all this sideways Bollinger Band noise and the upper numbers right here, it's probably easier for the market to set back than anything else. When you take a look at the 10-year notes, you have an overbought condition, very clear. Higher lows, higher highs, right into the upper Bollinger Band. Didn't quite make it to the 100-day average, trying to set back a little bit. In the March dollar index, You know what I'm going to say. Support against the 18-day average of closes with a level of support under that at the 100. But because this market is staying in overbought territory with a reading at 71.28 on the D line of the slow stochastic, to me it's just an overbought market in an uptrend, needs to work that condition off. In the euro currency, you had an outside day up. To set up a bear trap in this, today's low has to be taken out. Is there anything bullish on the chart? Well, that becomes the problem. It could be on the swing line with a pattern of higher lows and higher highs, depending on tomorrow's action. But you have a lot of resistance here at the 18-day average at 106.55, and that's where I think you're stuck. The market isn't falling because I think it's just been, if you will, locked into an oversold condition that refuses to embed, that is, convert itself to a downtrend. In the British pound, I'm going to still say you're just caught in all this noise here. And if you'll notice, you get up, you come down, you challenge the 100-day average, and then you lift away from it. Anyone trying to catch a trade in this, I wish you the best, but you're probably frustrated, and that's what you should be. Because it's when you get these narrow bands, I've learned over the years, I stay away from them until I get a breakout one way or the other. Then we get to the March Japanese yen, which made the highest high of this recent move and then finished the day lower. Did not get down to the 18-day average just yet, but I wouldn't be surprised if it does. And I just see it stuck, like so many of the other currencies, in that sideways action. Now, the logical thing you should ask is, Ira, what happens when you come out of the sideways action? And I'm going to give you the secret. You start trending. Got it? You start trending. So be ready for that. What about the crude oil? Well, you can argue that, again, this sideways action, a lot of noise. You can see it in momentum. It's not giving you a direction. The market again came down today. Didn't quite get back to the 18-day average, looking for support. A hard one. You know, the market's trying to go into what we call a backwardation. And if it goes into that, the front months become worth more than the back. That's a sign of a market going up. You might want to look at sugar because it started going into a contango today where the front months start going underneath the back ones, and that's a bearish condition. In the rebob gasoline, the 100-day average, study that one in green. That's probably the big number that this market's looking at. Now, you do realize we soon get to the point where the demand for gasoline starts picking up, and this market, in anticipation of it, normally advances. So I don't have a signal yet. I do have the pattern of higher lows and higher highs, but it's refusing to stay over the 18-day average of closes, which is the problem. And it's also caught between the 100-day and the 18-day, just mocking itself back and forth and, if you will, chopping up trade. In the nat gas, I loved today's action. If you have my newsletter, you know why. And in looking at the market, the pattern has been lower highs, lower lows. Now you have Tuesday in front of us. Tuesday reversals in a number of markets, very probable. The natural gas got hit because they were looking over the weekend for colder weather, didn't get it, and the market came in with warmer forecast than that, and away you fell. You're at the right-hand side of the Bollinger Bands with an embedded reading. The market was still, I know that's hard to believe, until it changes, it still looks as though the pros are going to sell this market on rallies until you lose that embedded reading. So you put it all together, you get a game plan, and I want to offer you one. You know, here's my cup of coffee that I start with. And in the mornings, what I do, I get to the office nice and early. Frankly, I start working at home first and doing my chart analysis and everything. By the time I get to the office, I'm pretty caught up. And yes, it's early morning, sometimes 3, 5, 6 in the morning. It depends what's going on in the markets. But I love doing this. So after I do that, I get to the office and I'm going to record a subscriber review for you. I start putting together all the morning research early, and then I'm going to review 40 charts. I'm going to give you ideas in those charts. Buy here, sell there. Here's what I think the pros are going to do. Here's where they're going to liquidate. Here are the reasons why they're going to do what they're going to do. Just like you're sitting next to me, I'm going to walk you through each chart. I really do that because the night before, if I have specific market recommendations, I also review them there. But my morning video covers way more than my written recommendations. I'll throw out lots of day trade ideas for you. The whole idea here is not can I get right or wrong? The whole idea is I want to be right or wrong, but can I throw an idea at you that makes some sense, that tips you into something maybe you wanted to do anyways? I want to offer you a free 20-day trial to this, to try it out if you haven't done so. If you have already done so, you can also go to our website and buy my research and just put in the code IRA, all caps, 20. I'm going to take you down by $20 on it. In other words, a coupon. It all ends this week. So if you're interested in that coupon, you got to do it now if you want this deal. And it's a great deal. And yes, you know, you're signing up for the research. You can stop it at any point that you want. Why not do that? If you haven't yet taken it, well, don't pay for it. Take it for free if you want, but understand you're going to give up after a few days. If that IRA 20 goes by, you're not going to get the discount on it. So this is your choice to make up for all of you. In any case, I'm Ira Epstein. I thank you for watching. Remember, if you click up here, you're going to get the, you'll see it on the YouTube form. You can either fill out the free trial access, or you can go, as you can see below us, at www.iraepstein.com. You can just go to research. You'll see subscribe right there. Underneath us on many websites, you'll see also the word submit. I'm Ira. You have a great day, and I'll see you tomorrow.